Good afternoon, everybody. Thank you for coming today and for your interest in Hecla Mining. I'm Mike Westerlund. I'm the Vice President of Investor Relations. I've been at Hecla Mining for 5 years. Hecla, if you don't know the name, we are one of the oldest mining companies in North America. We've been in business 126 years. We're the largest producer of primary silver in the US. We're the third largest producer of lead and zinc in the US. And we're also a leader in mining innovation, which is the title of my talk today. Mining innovation is here, there will be winners, because it's an important change in our industry to change the practices, to pull people out of the mines, to become more efficient, to lower cost, and to make the mines safer. And we're a leader for companies our size. And we'll go through this really quickly, but we're at our booth desk at the end down here. I'd be happy to spend more time with you if you come by. I will make forward-looking statements. So we're at a tipping point in the mining industry where the technology is finally catching up where we need it to so that we can bring in this technology and change the way that we mine. So there's three big things I want to talk to you about today. The first is the premise that not all ounces are created equal. If you think an ounce of silver in Argentina in the middle of nowhere is worth the same as an ounce of silver in Alaska, you're mistaken. And we're going to talk about that. I'm also going to talk about why would you invest in Hecla. What is it about our strategy of buying long-lived assets that we can improve, that we can make more productive, that we can make more money on? Why does that make sense? We'll talk about that. And the third point I'm going to make is that mining innovation is here. There's going to be winners and there's going to be losers. So let's start. Not all ounces have the same value. Over the last 10 years, Hecla's added 300 million ounces of silver, which sounds like an impressive record. Some through acquisition, some through drilling. But we've done it, and when we do our calculation for our silver ounces, you have to use a price to determine is it economic. We use the lowest price in the silver industry to do that calculation. What that means, there is no more conservative calculation in the silver industry. We used $14.50. Today, silver's trading at $17. Our most marginal ounce has a built-in margin of $2.50. Some of our peers, you'll note, have used prices up to $20 to determine if their reserves are economic. So clearly, we have a lower price reserves, we have higher quality. And it's because we're high grade. We have some of the highest grades in the silver industry. And what high grades mean to a silver producer is that when prices fall, you still make money. You don't have to change your style. 2013, 2014, 2015, what did everyone do in the sector? They sold projects, they fired their workers, they tried to pay down the debt, they issued equity. What did we do? We started a new mine. And guess what? In 2016, we had record production for the company in 126 years. So when you're high grade, you have more flexibility, you have higher margins, which I'll show you in a minute. And we've managed to do this without sacrificing the quality of our geopolitical risk. Our mines are in Alaska, they're in Idaho, they're in Quebec, Canada, they're in Mexico. We don't wake up in the morning as the head of investor relations. I don't wake up in the morning and wonder, has the government stolen my project today? Am I going to have to write a really nasty press release? I don't think that. We have the lowest geopolitical risk, one of the best in our industry. And what that means is that you know that the ounces will still be there tomorrow when we come around to mining them. So let's talk about why you would invest in Hecla. It's the strategy. This is a complicated slide. Here's the strategy. We buy long-lived assets that are low cost. Why do we buy long-lived? We're not in the business of closing mines. We're in the business of building mines. And when we build them for decades because the metals price moves in a cycle, but you can't predict when the highs will come. You have no idea. By having a mine that lives 10, 20, 30 years, you'll see multiple price cycles, and you make all the money at the top of the cycles. Additionally, if it's long-lived, you're willing to invest to lower your cash costs because you're going to pay back over decades. These are the innovations I'm talking to you about. You're going to see some examples here in a minute. The last quarter was a very good quarter for the company. It's a little bit hard to read the slide. I'm only going to highlight this right here. Our cash costs fell 117%. We produced silver in the third quarter for minus 63 cents an ounce. Because the value of our byproduct credits, remember I said, third largest producer of lead and zinc in the US, the value of those byproduct credits, they're trading at 10-year highs. We offset that against the cost of producing the silver. We're producing at a negative cash cost. Our margin is higher than the price of silver. Our all-in sustaining cash cost fell 50% to just over $6 in the last year. And if you look at our share price performance, we've massively outperformed our peers over the last year and a half because of the quality of the assets. We mine lead, zinc, gold, and silver. Right now, you'll see we produce more gold than silver because one of our 4 mines is not in production right now. It's on strike. And we'll talk a bit about that. That's an important distinction. It's important you understand the fundamentals behind that. But typically, we run about the same amount of revenues from gold and silver, depending what happens with the price. And here's our margins. This is absolutely fantastic. We have a realized silver price in the third quarter, $17. Our margin's 104% of that. So let's talk about innovation. This is why we came here today. I'm excited about this. This is a topic I want to talk to you about. The question is, why would we have to innovate? People have been mining for years. Why would we have to innovate? Well, here's a picture from a mine in the early 1900s. At that time, over 100 years ago, 50% of the variable cost was labor. And the question is, what do you think the variable cost percentage is today in an underground mine? It's 50%. It has not changed in 100 years. And the reason is, this mine was right near the surface. It was high grade. They didn't pay the guys anything, and there was no safety rules. Today, we got men at the face still working with machinery, but they're still at the face. They're deeper, it's lower grade, there's a lot more regulation, it's a lot more expensive to mine. We need to become more productive. Here's an example of productivity. This is a fellow in Quebec. Now, 5 years ago, we had a shaft operator, and we had 3 guys at different levels running a jackhammering the rock as it got dumped into the grizzlies. Every shift, 4 guys. Today, it's this guy. He sits there, he runs the shaft. If there's no people on the shaft, it's automated now. He turns, the shaft runs itself. And he has 3 rock breakers at 3 different levels that run remotely. Why that's important is he does not go down into the mine. So we do not have to worry about shift change with him. He can jackhammer rocks as long as there's rocks there to do. Far more efficient, far lower cost. That's the future of the mining, move people back from the face. This is the low-hanging fruit. It's one of the secrets in mining. The mine only runs when the men are in the mine. When they're not in there, you blast, you pull everyone out, you ventilate the gases, you wait till it's safe, you test the air, you send the men back in. It's 2.5 hours, twice a day. You're talking about 4 or 5 hours. That mine sits completely idle. So what are we doing? We're now operating during the shift change. How do we do that? We start at Greens Creek. This is one of the world-class silver mines. This mine has earned us more than $1 billion in free cash in the last 15 years. We bought it fully from Rio Tinto in 2009. And this is where a lot of our innovations are happening. The cash costs here are minus 15 cents an ounce right now after byproduct credits. The first thing you got to do when you're going to innovate, you're going to Wi-Fi the mines. So what does that mean? We put Wi-Fi repeaters in. We install them ourselves, put repeaters in underground. Now we can collect all sorts of information. You're thinking, like what? Well, for example, every yellow dot there, that's a worker. Every blue dot is a tractor. They know where the tractors are. The tractors know where the people are. They no longer have any issues combining and running into each other. The accidents are far less. More important than that is this. This is a tablet that's handed off from supervisor to supervisor at the end of each shift. They don't write anything down on a piece of paper. They don't forget to type it in. It's all in there. Their work instructions are on there. They write in what they've done, and they hand it to the next guy. There's 0 errors. There's 0 recording of information other than this electronically. What's really cool on this tablet, why I like showing this picture, what you see there, those colors, that's every fan in the Greens Creek mine. Today, a supervisor from anywhere in the world there's a Wi-Fi connection can turn on and off the fans. And that's interesting, but that's nothing, because by Christmas, the fans are going to turn themselves on and off. And what that means, think of the analogy. If you have a house, you're not air conditioning the whole house anymore. You're only turning the fans on the room you go into. If I go into the mine, it senses, Mike's here. What's he driving? I'm driving a battery-powered vehicle. Okay, we'll turn the fans on a little bit. I'm driving a diesel-powered vehicle. We'll turn the fans on a lot. There's 6 vehicles. We'll turn the fans on a lot. They will control themselves. Think of the energy savings. It's enormous. Let's talk about other innovations. Tele-remote mining. We talked about what are we going to do during the shift change. Well, we have an LHD, a load haul dump, or a mucker you might call it. That thing will run from this station on the surface while there's no men in the mine. So the mine is productive when there's no one there, because this individual who's run that machine for 15 years, he's running it from surface, but he doesn't actually run it anymore. You can see videos here of the machine running. He drives it once, and the machine runs itself. So what does that mean? By the end of next year, he's going to run 3 of them. And what's interesting about these machines and about innovation is that machine runs faster than he could drive it himself. We talked to him about that. He said, I can run it for that speed for 1.5 minutes. I will lose my concentration. That machine's going to hit the wall. This machine cannot hit the wall. If it thinks it's going to hit the wall, it stops. And it says, rescue me, and they reset it, and they drive it around the issue, and it keeps going. 2 years ago, this machine did not have the capability to load or unload itself. All you got to do is ram it into the rock pile. It couldn't do that. Today it can. The technology is advancing extremely quickly. So we're investing in this. The cost of automating that machine is $150,000, which turns out to be how much an employee costs for a year. So there's huge savings coming. This is another innovation. This is computer-guided drilling. It's really cool. What you do, is you line it up, and you push a button, and the computer does the drilling for you. Now, why does that matter? You can have a guy drill, or you can have the computer drill. Every hole is perfect. The holes are deeper, the brakes are better, there's 10% less dilution. That's savings. Think now, we're going to own these mines for 30 years. What's the savings? It's enormous. Let's move on to some more. This is a little hard to understand. We've invested in improving the recoveries at Greens Creek. We can't make the mine any bigger. We're in a national monument. What we could do is make it run better. The recoveries, we increased them by 7% in a year and a half. We spent $1 million. And the payback, it's increased the value of the operation $100 million over its life. So those benefits that we gained are going to pay back every year for us and our shareholders. That's the point of this. I can tell you that the biggest bonus paid as a percentage of income within our company that year was to the plant manager who came up with that idea. We reward performance, and that was excellent performance. Let's move on to another mine, Lucky Friday. Lucky Friday's been running for 75 years. It's on strike. It's been on strike since March. The principal reason for the strike is that right now the mine is controlled by the 6 most senior miners. They can determine the future of everyone in the mine. They tell people where they're going to work. They say who they're going to work with. They take the most lucrative stopes for themselves. We're changing the way the mine's going to operate. The mine is not very profitable right now. People have concerns. I get calls every day and they say, oh my goodness, it's on strike. They're right. It affects the amount of silver we produce. It makes very little margin. We lose almost no money. We're running this mine at 10% capacity using the supervisors. It effectively covers the cost of keeping it on care and maintenance. The strike's not going to last forever. When it ends, that cloud disappears. All we have now is the innovations happening in the company. So there's an opportunity there, I believe. I can't predict when it will end. I wish it was over now. It's Steelworkers Union. Eventually they're going to come around, we believe, or we'll find a way to meet in the middle, I hope. Conversations continue. I hope to have an update for you soon. Let's move on. This is why we're making this effort. We're coming into the highest grade this mine has seen in 75 years. Here's a picture from the face, 97 ounces per ton, 47% lead. At that rate, you can't fill the buckets full. It's so heavy of lead. This is what we're coming into. We're going to mine this more efficiently. How are we going to do that? We're bringing in battery-powered equipment. Guess what? It's a mile deep. Costs us a fortune trying to ventilate the air, trying to get the heat out from the diesel machines, trying to get the cool air down. Battery-powered equipment doesn't generate the heat like that, doesn't generate diesel particulate matter. Doesn't cost much more, but it's considerably safer for the workers. But this is the Holy Grail. This is a remote vein miner. You have never seen a picture of this before because there's only one in the world, and it's running on a test down in South Africa. It cuts the rock. It no longer drills and blasts it. Think you're a mile down. When you blast, the energy goes into the earth. Guess what? It comes back in the form of rock bursts. It's unstable. You have to keep everyone out because you got to be safe. Well, we're going to mine this mine down to almost 2 miles for 30 more years. The way we're going to do it, this machine cuts the rock, a little kinetic energy. It cuts it. It passes the rock underneath. The LHD dumps it. As it moves forwards, the arms go up, it puts the netting up, drills the bolts, and it just progresses. They call it a rock factory. That's what Lucky Friday's turning into when we change the way it's mining. Assuming that works, it's arriving late 2019, 2020 it's in operation. We think the mine goes from about 3 million ounces a year to about 5 million, but the economics are going to approach Greens Creek, which is one of the world-class silver mines. This is the future of mining, pulling men away from the face. And in fact, this machine can be run from surface. They don't even have to be down there running it. So if it works, 2020 we'll know, we'll buy a second one. The payback's enormous. The mine becomes extremely productive over 30 more years. That's why we're making the investment. Casa Berardi in Quebec, bought it in 2013. It's a great mine. This is why it's doing so well. We've doubled the throughput in 4.5 years. We've introduced surface pits and underground for the first time in the mine's history, set a record for gold production in the last quarter, and now we're finding all sorts of surface material. I think the mine, right now the mine life's about 10, 12 years. It's probably considerably longer than that. And what we're doing in Quebec, this is really exciting. We're automating a drift because we know the mine's going to run for a couple decades. Let's improve it. Let's lower the costs. We're bringing in automated trucks. They're going to go back and forth across 1.5 kilometers. Here's the economics. We could have had 5 trucks with 4 drivers each, 20 drivers. Instead, 2 trucks, 4 supervisors. That's it. And these trucks that we're bringing in, I'll show you a picture. Here they are. First one's on site, 40 tons. The second one's coming. It's got a cab, but there's no one in it. The maintenance cost is 40%, 30 to 40% less. And the reason? The truck cannot hit the wall. 10 years ago in Australia, the big mining companies, BHP, they all started hiring women to drive the trucks because women took care of the trucks better than the men did. It's absolutely true. They took care of their machines, they drove them carefully. Guess what? The computer is better driving than the women. because it always runs at exactly the right revs. It never can hit the wall. Maintenance costs are lower. We need less maintenance people, saving money. That's the point of this. We're saving money, and we're going to save it for decades. As that mine gets lower, deeper in the ground, typically costs go up. Well, guess what? We're going to efficiently handle the rock. It comes over. Remember I told you the shaft is automated? Move it over automatically, hoist it up automatically. It's very, very efficient. Let's move on. San Sebastian, this is my favorite mine because we put $4 million into this mine in 2015 when everyone else said, sell your assets and fire your workers. We invested $4 million. Guess what? 2016, it made $92 million of free cash for us. After capital, $92 million. This year, it's north of $25 million already. It's been an extraordinarily profitable mine. And what we're doing now is we're moving underground. This is what the underground looks like. We're going to mine this for a couple of years. We've exhausted the high grade at surface. We're moving underground. The grade's going to fall a bit. You'll probably see costs go up a bit because it's underground. But here's the holy grail. There's a massive structure at depth that we've known about, and now we're expanding it. We just did a drill hole 2,500 feet away, and guess what? The same mineralization has appeared there. I'm not saying it's complete between the two. This is a huge sulfide zone, copper, lead, zinc, silver, and this could be 5+ years of production. Right now, the mine will produce through 2020, we believe. This could be 5 more years after that. I'll just go real quick. Rock Creek and Montanora, all I'm going to say about that, we're permitting in Montana. When these two mines go into production, they double the size of the company. Realistically, it's probably 10 years from now. When it happens, we double. How many companies do you know that you can go out there that can say that? Nobody can. We have growth coming internally. And just finally, our guidance, all I'm going to say about the guidance is this year we're going to produce silver after byproduct credits for $1 an ounce. All-in sustaining cost for silver will be $9. I appreciate your interest. I'm Mike Westerlund, Head of Investor Relations. Our booth's down at the end. If you ever want any more information, just reach out to me. Thanks very much.